Ravi Kataria is now joining in. He's Managing Director of Investment Imperative. He's with us here in our studios. Ravi, thanks very much. Good to have you here.
Thank you.
A little short on time today, so let's dive straight into stocks, Ravi.
Sure.
What's top of your mind?
Vikas Ecotech is a specialty chemicals player. The company provides the compounds and specialty chemicals which are lead-free. It drives majority of its revenue from organotin stabilizers, recycled compounds. Organotin is lead-free, which is supplied to pipes, manufacturing, engineering kind of industries. This is US FDA approved product, so that's why it has gained a lot of growth in exports over the past, say, 2 years' time. Worldwide, we are seeing the regulation being put in place for usage of chemicals which are toxin-free. As a result, we are expecting in India also the government to come up with a regulation space for pipes manufacturing which can be lead-free. If that happens, as we are envisaging in over the 1 or 2 years time frame, there will be a serious run for the stock because it's one of the few players globally which manufactures such commodity. It's space in recycled compounds. It manufactures like additives from waste cooking oil. It is tied up with Navigate Corporation in Czech Republic for supplying of technology. When you combine, see these 2-3 spaces, they have grown from nothing to almost like 50 to 80 crores in their top line in just last 2 years' time. We are estimating, say, doubling of the top line over the next 2 years because of one, operating capacity expansion to 50,000 metric tons in their plants in Gujarat, sales opening up in Kandla and Noida. So they'll see a tickering of their operating margins.
Durable advantage. I mean, a lot of the big global guys would be doing this and other things, right? I mean,
yes, they are
BASF, Dow, Exxon, etc., etc.
There are just 4 or 5 which have got this kind of technology in place, or the chemicals manufactured. PMC is one, Galata Chemicals is one, couple of players from China, Hunan, Yunnan, if we see their operations in India are limited. That's why the cost constraints, if we consider the multiple parameters, the Indian players would certainly go for something like Vikas Ecotech for their long-term supplies. As a result, we saw Mr. Jayant Chheda also putting up, increasing its stake from 2% to 10% in the stock.
Okay, and your target price is 49 by when?
By FY19. Okay. It's 27 by FY18 because the Gujarat plant is expected to commission by the end of FY18. So the rolling over of the, say, benefits will come in the FY19.
Okay. Well, the other one that you're looking at, and it's fairly researched, is Telvakers. So what is new for you?
The new therein is, I mean, we are seeing it from the global perspective, like David Lloyd, they have tied up with them. We are expecting that they would get their regulations approved for opening up, say, a club in Pune in, say, next couple of quarters. So these would trickle down into their revenue lineup in, say, FY18 and 19. And their PWG brand, they're targeting 100 odd gyms in, say, in Sri Lanka, apart from adding another 100 in India. So we're looking at a huge, say, portfolio of gymming business, one, and the splitting up of business into the lifestyle with David Lloyd. So there will be a serious unlocking of value if the things go as per the plan from the management's perspective.
Okay. The other one that you are tracking is Rushil Decor. So that one has actually already seen a good run. What are your thoughts on this stock?
So we have achieved 2 price revisions on that particular stock. We had started advising on that since the beginning of 2016. Now, the laminates and MDF space is 6,300 odd crores in India. It's expected to grow at 10 or 11% over the next 5 years time frame. But the organized players are expected to grow at 15 to 16%. Rushil already demonstrated 19% top line growth over the past 7 odd years. The unorganized players have the cost advantage, which is going to drain out because of GST in place, and secondly, the restrictions from the Myanmar side for selling of unprocessed timber. So these 2 things, when combined, their cost will increase, and finally we'll see, say, a good top line growth for Rushil by the FY19. Although stock is trading at EV to EBITDA of 16x currently, which is in line with the big players like Greenlam. but we are expecting some more augmentation in operating margins. Yeah.
Thanks very much, Ravi, for coming in. Appreciate you joining in with that perspective. Thanks indeed.
Thank you very much.